Londra'da LNG Capital CEO'su Louis Gargour bizleri bekliyor. Good afternoon, Louis.
Good afternoon.
I would like to start with the recent Trump trade and the reflation trade side. Do you believe that the Trump administration's aim on tax cuts and also gaining momentum on US economy theme has been disrupted a little bit after the healthcare reform? And do you believe that is going to be the case in terms of market pricing in the near future?
I very much believe the U.S. inflation expectations are elevated on the back of the Trump victory. I think the administration in the U.S. has been able to get less done, specifically healthcare. However, I do think the growth in not only inflation in prices, but wage inflation in the U.S. is high enough that we may get a situation where the shape of the yield curve will change.
So what do you think about the term premium? Because when we look at the recent pricing on US Treasuries, 10 years are hovering around 220s. Do you believe they
Yes.
too get a little bit downside, or do you believe that is going to stabilize somehow?
I think, have you ever heard the expression, buy the rumor, sell the fact? I think the U.S. market bought the rumor. In other words, Trump comes in, tax changes, stimulus for small, medium-sized enterprises as well as big companies. So I think the yield curve shifted based on that, the term premium. Now, I think what we're seeing now is the fact that the numbers are not as inflationary as expected. But of course, I do think as well that the longer-term treasuries, 10 and 30 years, react a lot more to expectations than where the data is right now. So my expectation is that yields come down a bit or continue coming down a bit. But in 3 to 6 months, we have a much higher 10-year, probably 2.5 to 2.7. Most people think the critical point at which you start to get a very fastly accelerating long end of the yield curve in terms of yields is above 3. So 3 is critical. I think we hit 2.5 in a few months.
So let's go to France. What do you think about this weekend's elections and its possible effects on markets as well? Because we see some market participants are trying to hedge their positions before the elections. And what do you think if the expected scenario, Marine Le Pen and Emmanuel Macron gets to the second round, what would be the effect of that?
So France is very interesting because what it represents is essentially a vote for Le Pen would be a vote to leave the Eurozone, or at least to renegotiate France's relationship with the Eurozone. So given Brexit has happened, given the election this weekend is in France, and Le Pen is, clearly may win the first round, we see significantly higher French government bond yields if in fact Marine Le Pen wins the first round. We also see a weaker French equity market. What really depends on is whether she has any chance of winning the second round, but we certainly see the risk to the downside in the short term. Peripheral Europe as well is looking overpriced in terms of how tight the yields are. So what our expectations are, we continue to see pressure on France, on Italy, and to a lesser extent Spain and Portugal, because if France does begin to leave the Eurozone, that does not bode well for keeping the Eurozone together.
And the last question is about emerging markets. How do you see their performance? Because they are performing very well this year. Do you believe that is going to be the major theme if the expectations on US side are not going to be so harsh? And what do you think about the general performance of Turkey as well? We underperformed other emerging markets till now, but now the markets seem to be a little bit more, showing more interest on Turkish assets as well.
Look, let's start with the first question. In terms of Turkey, I've had the benefit of having visited Turkey a number of times, and a family I know has lived there. It's a very productive, hard-working country. So I think now that the uncertainty about the election is out of the way, I would see the Turkish, both bond markets as well as the equity markets, catching up with what's happened in emerging markets this year. In terms of the second part of your question, emerging markets were the biggest underweight everybody had in their portfolio because of Trump and because of the US dollar and whatnot. Now, it just goes to show you, you should not always believe what everyone thinks. In fact, entering into this year, everyone thought underweight emerging markets. That was a massive overweight. The part of emerging markets I like is the emerging market corporate debt market. I believe there are some industries in emerging markets that are not entirely benefiting from commodity prices or oil, i.e., if you strip away the commodity economies, I like a number of corporate debt in different sectors: service industries, telecommunications, manufacturing, autos, and I think that applies to Turkey as well. I definitely think those sectors in Turkey should be the ones that you focus on, and not to mention financial services. That is a very big overweight in our portfolios, and I think financial services in emerging market economies stand to benefit from, if you will, moderate inflation and a dollar which is stabilized at these levels, as well as a strong, reasonably stable commodity complex.
Louis Gargour, thank you very much for joining us today.
Thank you for having me, guys.
Evet, gayet dikkate değer görüşler aldık.